Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track 6 hours of the day's trading action in 5 headlines. I'm Sonia Shenoy and here are all the top headlines for the day. The markets gained for 4 days in a row for the first time in 2023. Sensex and the Nifty gained close to 1%, led by financial heavyweights, but mid-cap banks fall. BSE companies gain a market cap of over 1.7 lakh crores today. Banks and NBFCs, including top names like HDFC Bank, HDFC, Bajaj Finance and IndusInd Bank, report strong growth in advances and deposits for the fourth quarter, buoying sentiment. And the windfall tax on domestic crude oil output is cut to nil and halved on diesel exports, offering some relief to producers. But the recent rise in global crude prices raises the risk of tax reversion. CNBC-TV18 learns that a cabinet meeting is likely later this week or next week, at which the recommendations of the Kirit Parikh Committee on gas sector reforms are likely to be taken up. And gold prices hit an all-time high in India. The yellow metal surged over 2% overnight. Silver surges as well to the highest since April 2022. Well, here's the lineup of all that we have in store for you. We'll bring you market opinion from Chetan Iyer of Morgan Stanley and Ashwini Agarwal of Demeter Advisors. Also, we have comments coming in from Pranjal Bhandari of HSBC and Indranil Sengupta of CLSA India on their key expectations of the RBI policy decision due tomorrow. Okay, lots happened in the markets today. The Sensex and the Nifty ended at the day's high and was led higher by financial heavyweights. Today was actually a very good day for the bulls. The bulls had tightened their grip on the market. It was a very strong session of trade. The good part about today is that the Nifty ended at the highest point of trade, as you can see on your screen, up about 160 points and closing above key psychological levels like the 200-day moving average. In fact, the market not only closed at the day's highs, but it was led largely by a lot of the heavyweights, large cap names, the bluest of blue chip names, whether it was L&T, the HDFC Twins, ITC, HUL, all leading from the front in trade today. On the losing end, though, you had names like Eicher Motors, Adani Enterprises, IndusInd Bank, NTPC and M&M that were on the downside. But, largely it was a market that had more gainers than losers today. Even in the broader markets, despite the mid-cap index being flat, the list of gainers was pretty long. So you had a Nykaa, which was up over 7%, Coforge was up 6%, IGL, Cyient were both up about 6-7%. These are just a few of the gainers that we had in trade today. But there are a couple of big cues lined up. There's the RBI policy tomorrow, where there's a 25 basis points rate hike expected. Apart from that, you have the earnings season, which kickstarts on in next week. In fact, on the 12th, you have TCS that comes out with its numbers, followed by Infosys, which comes out on the 13th. So lots of big cues to watch out for. And the market has, of course, had a great day today. So let's get you some opinion too. India's growth story remains one of the best globally. That's the word coming in from Chetan Iyer, the chief Asia economist of Morgan Stanley. He adds that growth could see some headwinds on account of higher interest rates. Listen in.
We think India can actually grow at 6.5%, but this weaker external demand will take some sheen off. And that's why we think growth rates will be closer to around 6.2. Look, I mean, if there is a deeper slowdown in the US because of this tightening of lending standards, you could shave off some more of India's growth. But broadly, the India story is really the best in the region, and also, in fact, I would say amongst the large countries in the world. I think that the services exports have been doing extremely well, and they have surprised on the upside, and the market share for India has now gone up to about 4.7%. So we think that, services sector is really the most important driver of current account at this point of time. And at the same time, we have also seen some upside surprises in the remittances inflows. So together, that's helped to keep India's current account balance in a reasonable shape. We're expecting it to be 1.9% in 12 months ended March 2023.
All right, in more opinion, Ashwini Agarwal of Demeter Advisors said that the market would witness a tactical bounce back as the world looks past rate hikes and banking incidents. He adds that Indian IT was relatively well insulated from sudden jerks in the US markets. Take a look.
We're still above the median, but not as expensive as we were 18 months ago when we were looking at valuations in the region of 21, 22 times. So a tactical bounce, or a relief rally as the world starts to look past the rate increases and hopefully there are no further banking accidents is probably what we are witnessing right now. In terms of telecom, yes, of course, stocks haven't performed, but it's a duopoly. The business is growing. And I think, you are starting to see some green shoots in terms of, some players trying to take up prices selectively. 5G rollouts are happening in earnest. So I think, there might be some upside left there as well. If you look at IT services in India, it's fairly well insulated in terms of sudden knee-jerk reaction on demand from their customers. But if you're looking at a 3-year trajectory, I think many of the IT services leaders should be able to grow revenues in high single digits very conservatively. Margins should be maintained, and therefore, they're good places to invest. The only caution I would make to this assessment is the outlook for the US dollar.
Okay, well, those are some, market views coming in. But the other big story and the big headline was that the chatter to buy Indian equities has now gotten louder over the last few days. Indian equities have received 3 positive updates from brokerages who are advising clients to accumulate as valuations have reached a reasonable level post the recent correction. Remember, the Nifty 50 index has corrected over 2,000 points from its all-time high of 18,888. And since then, brokerages have, particularly foreign brokerages, have turned optimistic on the market, citing reasonable valuations. So let's start off with Sunil Kaul of Goldman Sachs, who talks about how the time has come to accumulate Indian markets. They have a buy on dip strategy, and they're saying that this is a good time to be buying quality stocks at a reasonable price. They also speak about how the valuations are now back at reasonable levels, and the MSCI India index is now trading at 19 times forward PE. Now, they've also retained their 12-month Nifty target of 20,000, and they stay overweight on banks and cement stocks. Let's move on to Bernstein, where Venugopal Garre is expecting the Indian markets to see a quick rebound in the near term. They say a rebound in Indian markets is expected after 6 months of underperformance to emerging markets. They see a room for rallies led by various factors, and they like financials, real estate, and cement stocks. And finally, a couple of days ago, if you remember, Morgan Stanley's Jonathan Garner had come out with a report where they said they upgraded India to an equal weight. They say the narrowing valuation premium and a resilient economy is the rationale for an upgrade. They like the demographics in India, they like the domestic demand growth story, and an improving FDI situation as well. So all in all, the chatter to buy India has gotten louder. But let's go across now to the next headline. You have HDFC Bank, Bajaj Finance, and Federal Bank were in focus because of strong business updates that they came through with. Abhishek Kothari is here with more details. Abhishek.
Well, business momentum was strong for HDFC Bank, especially on the deposit front. So deposit growth of 20.8% YOY is perhaps the best in last 11 quarters, and a sequential growth of 8.7% is perhaps the best in last 20 quarters. Now, the advances growth was at 16.9% YOY, which is a 5-quarter low. However, sequentially or quarter-on-quarter, the growth was around 6.2%, perhaps the best in last 4 quarters. So the credit deposit ratio is at 8-quarter low. However, one key factor is that the CASA or the low-cost deposit momentum was really strong, growing at 9.6% sequentially. So ex-pool, the loans which they take from SDFC Limited, the loan growth was around 16.94% YOY and about 6.23% on a sequential basis. For Bajaj Finance, the AUM growth was pretty strong. The new loans are up 20.6% YOY and a decline of 3% sequentially. Sequentially, if you take a look in any Q4 versus Q3, the new loans have actually declined, and this is one of the lowest decline that you are seeing in last 4 years. Customer base is up 20% YOY and about 4.5% sequentially. However, the cross-sell rate that's come down to 6.7%, and that's not a good sign for Bajaj Finance. AUM growth pretty healthy, 28.8% YOY and about more than 7% sequentially. So sequential AUM growth is perhaps one of the best in last 4 quarters. Federal Bank, the business momentum has remained robust, one of the best that you are seeing in last 14-17 quarters. So deposit growth of 17.4% YOY is perhaps the best in last 14 quarters. Sequentially, it was at 6%. Advances growth of 20.2% YOY is the best in last 17 quarters. Sequential loan growth was at 3.8%. So you saw a credit deposit ratio decline to about 83.2% versus 84.9%. So this could put pressure on the net interest margin. The CASA has been very tepid in terms of growth rate. It's just at 3.9% YOY and about 1.1% sequentially, which meant that the CASA ratio is at 11-quarter low of 32.7% when compared to 34.2% in the previous quarter. Back to you.
Okay, Abhishek, thanks a lot for that. Well, the third headline today, Oil India and ONGC gained after the government cut windfall taxes on crude petroleum to zero. However, ONGC ended the day lower. Brokerage firm CLSA is also bullish on the two stocks. Sonal Bhutra is here with the details. Sonal, over to you.
Well, it's a short-term positive, of course, for oil producers, the likes of ONGC and Oil India. The news is that the government has gone ahead and they've cut the windfall taxes on crude production to zero versus 3,500 rupees per ton earlier. Remember, it is the first time in 9 months that this has happened. The first time it was levied was back in July. As far as export duty or special additional excise duty on diesel is concerned, it has been cut to 2.5 rupees per litre versus 1 rupees earlier. On petrol and ATF, it continues to be nil. Now, CLSA says that yes, it is a positive for Reliance Industries. This is the lowest impact that they are seeing of windfall taxes on their diesel exports, so that bodes well for the company. Right now, these companies are making post-tax realizations of around $75 a barrel, and that's why they have a buy on oil and ONGC. But do remember, in last couple of trading days, we've seen oil spurt to levels of $85 a barrel because of the OPEC cuts that we've been talking about. That means that yes, in the next revision, there's a possibility that these windfall taxes could come back. So while it's a short-term relief for these companies, in the longer term, we could see a hike in windfall taxes. So far, they've been able to make post-tax realizations of $70 to $75 per barrel. That could continue, and that is something that the street is analyzing and watching out for closely.
Okay, Sonal, thanks a lot for that. Well, Vedanta gained close to 1% after its Q4 business update. Nigel is here with the details. Nigel, over to you.
Well, that's right. Vedanta came out with their operational update and it looked quite good actually. On the aluminium business, where it was more or less flattish on a year-on-year basis, but that's par for the course and that's on expected lines. The zinc India business, well, there it looked pretty good. The saleable metal, that's lead as well as zinc, put it together, that was up by close to 3%. But the real kicker came in their silver production. Now that jumped up by close to 13%, both on a sequential basis as well as on a year-on-year basis. And that is a positive given the fact that silver prices are rising as well. The zinc international business, the BMM mine there on a small base, that's what's ramping up. And that's why you had the total mine metal that came in higher by close to around 14%. The only problem has been the oil and gas space. And now that there's a degrowth, if you look at it both on a year-on-year basis as well as on a sequential basis, and that's a little bit disappointing. But otherwise, the steel business as well, which is a smaller part of their business. Remember, they had a bit of a shutdown in the previous quarter, that's Q3. In Q4, things were up and running. So on a year-on-year basis, they've delivered a growth of close to around 18%. And finally, the total power sales, well, that came in much higher. You had their PLFs as well were higher, and a couple of their facilities as well were functioning at high utilization levels. So that explains that Vedanta's operational performance gets a bit of a thumbs up.
Okay, Nigel, thanks a lot for that. Meanwhile, Bharat Forge was the other stock that was under pressure today. It was down 2% after its North American Class A truck orders saw a decline. In fact, for the industry as a whole, the North American Class A truck orders were not too great. There was a fall of 10% year-on-year, a fall of 17% month-on-month. And, not just Bharat Forge, a couple of other companies like GNA Axles also have an exposure to the North American truck market. Motherson Sumi, through one of its subsidiaries, PKC, has an exposure there. So these were a couple of stocks that were under a bit of pressure today. But in more stock-specific action today, L&T and NBCC soared over 3.5% on strong order wins. Vivek Iyer is here with the details. Vivek.
Well, absolutely right. So, Larsen and Toubro, after a while, you're seeing such a large order win. In fact, the company, categorizes this order win as a mega order win. So, what's actually happened is that the company has received multiple contracts, and the value of these contracts is over 7,000 crore, and this is for the hydrocarbon business entity of the company. So, this is multiple offshore packages that the company has received, and this is from one of the largest clients that the company has in the Middle Eastern market. So, the hydrocarbon business, for our information, is actually now housed under L&T Energy Hydrocarbon, that is LTEH. The other stock, of course, is NBCC, an other order that the company has got. This particular order is worth 448 crore. This is from the Ministry of Home Affairs, and this particular project is a road construction project in the state of Mizoram. So again, this particular stock too is seeing quite a bit of a spike up in today's trading session.
Okay, thanks Vivek for that. Let's slip into a quick break, but don't go anywhere. We'll be back in just a couple of minutes from now with all the other big headlines of the day. Stay tuned.
Avalon Technologies Limited, one of the leading fully integrated electronic manufacturing services companies with a focus on high-value, precision-engineered products, now makes an initial public offer of equity shares with a face value of 2 rupees each for cash at a premium. The 100% book-built offer being offered in a price band of 415 to 436 rupees per equity share. Opens 3rd April 2023, closes 6th April 2023. For risk factors and more details, refer to the red herring prospectus.
I am heat.
Blue Star Inverter AC with fast cool technology. Bye bye heat. Blue Star.
एक है जमीन मेरी, एक है मौका मेरा, इसमें सब लगाऊंगा, अपने इरादों से मजबूत एक घर बनाऊंगा।
हाँ शुक्ला जी, भिजवाना सिर्फ अल्ट्राटेक ही।
अल्ट्राटेक ही क्यों?
आप ही ने तो कहा था कि घर जिंदगी में सिर्फ एक ही बार बनता है।
घर एक, मौका एक, इसलिए सीमेंट भी देश का नंबर 1। अल्ट्राटेक, इंडियाज नंबर 1 सीमेंट।
The stage is set for India's largest ever theatrical production. A visual marvel unlike any.
Welcome to the home of the arts, artists, and the audience.
Neeta Mukesh Ambani Cultural Center presents the great Indian musical, Civilization to Nation. Book your tickets now.
Money Control's inaugural India FinTech Conclave featured power-packed discussions on burgeoning financial technology or fintech landscape in the country as it put the spotlight on defining trends to position the sector for transformational growth. Catch all the highlights from Money Control's India FinTech Conclave 2023 at these times.
Powered by Federal Bank, your perfect banking partner. In association with LIC, हर पल आपके साथ.
Welcome back. You're still with us on Markets Today. Let's go to the rest of the headlines that we're tracking for you. The fourth headline today, the Union Cabinet is likely to discuss gas pricing issues in the upcoming meet. Sources tell CNBC-TV18 that the Cabinet is expected at looking at the recommendations of the Kirit Parikh panel on gas sector reforms. Shares of gas distributors like IGL, Mahanagar Gas and Gujarat Gas were also buzzing in trade today. Sapna Das joins in with more on that. Sapna, over to you.
So basically, this is an important heads up in terms of the cabinet likely to consider new gas pricing guidelines. And this will be, of course, in the next upcoming meeting. It could happen as early as tomorrow or it could happen sometime this week. But that's a clear indication. So that's one. Now, in terms of what the government is going to accept as far as the Kirit Parikh recommendations were concerned, that's something that we'll have to wait and watch for. Very clearly, 2 to 3 important areas that the Parikh panel had marked. One, of course, dismantling of APM over the next 5 years. So a transition period to be given for the old gas fields, with the pricing range of $4 to $6.50 per MMBTU. That's one. And, of course, dismantling by 2027. That's one. Second, of course, in terms of the new and more challenging gas fields, where the upper price cap needs to be done away with. That's second. And, third, overall, in terms of moving towards a more market-determined price for gas, rather than, benchmarking it to your international gas hubs. More or less, this is what the panel suggests. Now, this was all supposed to happen as per the panel from April 1, but we are already in the first week of April. So it remains to be seen how much of it the government accepts and cabinet gives its approval, and what are those, rollout timelines. But going forward, it's very important now, not just for the industry, but also for consumers.
All right. Thanks a lot, Sapna, for that. Well, the fifth headline today, gold prices hit an all-time high in India. The yellow metal surged over 2% overnight, and silver surged as well to its highest level since April of 2022. Gold is now in excess of 60,000 rupees per 10 grams. Manisha Gupta is here with all the details. Manisha, over to you.
Well, with 2% gains overnight, gold prices in the global markets are trading at a one-year highs, and we're trading at an all-time highs in the Indian markets. We did hit that 61,000 rupees per 10 grams for the markets here. For the silver prices also, it has been 5% of gains overnight, and we are trading at a 32-month highs. 75,000 rupees per kg in the Indian markets has been broken on the higher side, and we've done $25 per ounce in the global markets as well. Well, the support comes in from the fact that the dollar index is trading at a 2-month lows. There is now a 57% probability of no rate hike in the month of May, and the weak US data that we have seen in sense of manufacturing numbers also has led to gains coming in for gold. Also, the conversation that most countries would want to trade with their own currencies, not wanting too much of emphasis or dependence on dollar, also has led buying in case of gold. Markets are looking at hedge funds buying gold too. So the shorts are being closed, longs being created. Net longs in gold right now are at 99,000 contracts. Net longs in silver right now stand at 10,000 contracts. Not just that, the ETF buying also has begun for the first time in 10 months. You're looking at central bank buying, which hit record highs in the previous year, also hit the best in a quarter in last 10 years, is what we have started 2023 with. The physical buying in the international markets also has been quite strong. For the Indian markets, though, with all-time highs and multi-year highs, we are looking at the spot prices now trading at a discount, where people are not buying gold, but getting their old gold and silver into the markets to cash it out.
Okay, thanks a lot for that. So that's on gold hitting new highs. But let's get back to the big headline, which is the RBI Monetary Policy. The Reserve Bank's two-day MPC meeting is underway with the rate decision due tomorrow. As per a CNBC-TV18 MPC poll, over 90% of participants are expecting a 25 basis points rate hike. Ritu Singh is here with the details. Ritu, over to you.
Well, it looks like we're nearing the end of the rate hike cycle, but before RBI well and truly changes course, there could be one more hike in the April policy. 90% of our respondents expect that the MPC will hike repo rates by 25 basis points in this policy, taking it to a 7-year high of 6.75%. The culprit here is inflation, which remains stubbornly above RBI's comfort level. And of course, the other area of consideration for the MPC is going to be action by other global central banks, but RBI has maintained that it is guided by domestic factors. All of the respondents to our poll said that the April hike will probably be the last one in the current monetary tightening cycle, which began in May last year. The peak rates are seen at 6.75% by the majority. But after this rate hike, RBI is expected to pause for a while before it starts to reverse these hikes. So 40% of our respondents believe that we could only see cuts in the second half of this financial year, whereas a third expect the first rate cut to only be delivered in the first quarter of the next financial year. 30% expected to happen perhaps sooner. Now, RBI could also raise the CPI forecast for FY23 marginally, given the unexpected high inflation readings recently, while leaving the 5.3% CPI forecast for FY24 unchanged. Now, RBI is also unlikely to tinker with the growth forecast, although some expect a marginal lowering. Almost 30% of our respondents said they expect the stance of the policy to also be changed to neutral, but a much larger majority of 70% believe it will be left unchanged at withdrawal of accommodation, because RBI may not yet be comfortable enough to signal that they are done with the rate hikes, given the global uncertain outlook.
We are looking at a hike tomorrow as well. We think that given where the currency is, you have to keep hiking if the Fed hikes. Then we see 100 basis points of rate cuts from October if the Fed were to stop at 5/4.
Okay, so lots of action lined up tomorrow with the RBI policy. But with that, it's a wrap on this edition of Markets Today. Thanks a lot for watching.